Welcome to have some. It's celebrating the retirement of our Planning Commission chair, who's been serving for 8 years. We also have coffee and water, and the restrooms are back there, and there are also restrooms way down the hall on the right. So I can't think of anything else that you need to hear from me, so I'll turn it over to Chris.
Okay, so I'm happy to take questions as I go along, so feel free to raise your hand. So what I'm going to talk about today primarily is this is a little loud, can we turn it down if possible? Is a new law that was passed on July 6, 2012 called the Biggert-Waters Flood Insurance Reform Act. And for those of you that own older buildings that are located in the flood zones, this can have a dramatic impact on the cost of flood insurance for you. So how many of you know that your building was built before the first flood maps, which are about 1980? Several. And how many of you have second homes here? A few. Okay, so there are some changes that are going to happen to those buildings that I think you'll be interested to know about, maybe not happy to know about, but so I'm going to talk about what this change of law means to you, identify who's affected, and what you can do to reduce costs if you're caught in this change of law. Flooding, as you well know out here, is a prevalent natural hazard, and almost every year it floods someplace in Oregon, a flood that damages buildings or infrastructure. And in Oregon, about 90% of the presidentially declared disasters have a flood component to them. Even if the major disasters, wind or what they call winter storms, flooding is often a component of that. And since 1978, the National Flood Insurance Program has paid out $91 million in claims. And that's constant dollars, not inflation adjusted. So we do need the National Flood Insurance Program to help people recover from flood events. And not all flood events culminate in presidential disaster declarations, which bring extra federal money in. So, and I should say also, homeowners insurance does not cover flood damage. So the National Flood Insurance Program is really the only way that you can protect yourself from damage caused by floods. About 26% of policies that are located on buildings located in the special flood hazard area have actually seen water in them at one time. So it's not like people are buying insurance and the NFIP is not paying out. So it's true that some people have never flooded, but I do want you to keep in mind that about a quarter of those policies in the flood zone actually have seen losses. The NFIP was created in 1968 to transfer the responsibility for flood recovery from the federal government onto the people who live in the flood zone. And also about that time, homeowners insurance dropped flood coverage because it was too costly for them. So the federal government stepped in and offered this flood insurance program. But it's more than a flood insurance program. It's also a land use and a building construction practices program. So in exchange for adopting local land use standards and building codes, but in exchange for local government adopting those, the NFIP provides insurance in that community. Now at the beginning of the program, older buildings that were built before the first flood insurance rate maps came on board had special subsidized rates. And the idea was that because those buildings were built before there were rules and standards, they were very likely to be in violation of those rules and standards, and they shouldn't be penalized in their cost of flood insurance. And the idea was that over time, those older buildings would be improved such that they did meet the NFIP standards. But in fact, that hasn't happened. And today, those older buildings are a drag on the NFIP and account for most of the losses. So on July 6, 2012, Congress passed a law that required FEMA to begin phasing out those subsidies on the older buildings. And the intent really is to force you to make those changes that that are causing losses. Make changes to the building to reduce the potential to cause losses. So that's mostly what I'm going to talk about today. So the Biggert-Waters Flood Insurance Reform Act was passed as a rider on a transportation bill. It was kind of a sleeper. No one actually voted for the bill by itself. They voted for the transportation bill. And it had some unintended consequences that you may or may not have heard about. And one of those unintended consequences is that for some people, flood insurance in the future will be quite costly. The Act reauthorized the National Flood Insurance Program until 2017, which was a really good thing because it was only being reauthorized in 6-month chunks, and then it would expire, and then no one could get a mortgage, and then it would be reauthorized for 6 months, and then it would expire, and that happened 18 times, and so it was really disruptive. So the real estate community was happy to see it reauthorized until 2017. The Act also requires the NFIP to repay loans that they've taken out from the Treasury since Katrina. Following Katrina, they had a debt to the Treasury of $18 billion. And since that time, they were making progress in repaying that. But $18 billion is a lot of money. They got it down to about $12 billion, and then Sandy hit. And now they're back up to $24 billion in their loans to the Treasury. Now, those are loans. The Treasury expects to be paid back for those loans with interest. So the Biggert-Waters Flood Insurance Reform Act put them on essentially on a payment schedule and said, we want you to pay this back within 10 years instead of dribbling it out forever. And most importantly for us today, it directed FEMA to phase out those subsidized premiums that were offered to older buildings located in the special flood hazard area. And I'm going to go into some more detail about which buildings those are and some terminology. So the NFIP estimates that about a quarter of the policies in Lincoln County are subsidized. And that would amount to an affected policy holder base of about 600 people. But the actual number of people affected is a lot bigger than that, because there are a lot of folks out there that have buildings in the special flood hazard area that for one reason or another are not carrying flood insurance and need to. So that population is quite a bit larger than 600 people, and I'll show that later too. So this is the date that each of the cities in Lincoln County and the county received their first flood maps, and you can see they range from 1978 to 1980. So if your building was constructed before the dates on the screen, you are what's called a pre-firm building, built before the first flood insurance rate map. If you were constructed on or after that date, and by constructed it's the day the building permit was issued, you are a post-firm building, and your flood insurance has never been subsidized. You have always been paying full actuarial rates. And theoretically, your building was constructed according to the construction standards for flood zones at the time. I say theoretically because over time, people change their buildings so they become not in compliance with the National Flood Insurance Program. So if you have a building in another area besides Lincoln County, you can learn what your pre-firm dates are by going to the FEMA Community Status Book, which is available online.
Question?
Yes.
Is building, the term building, is that synonymous with home or commercial?
No. That's a great question. In the NFIP, a building is any structure that has 2 walls and a roof. So it can be a barn, it can be a garage, it can be 2 walls and a roof. Okay, so I'm going to use some terminology here that I have to warm you up to. The first is the base flood. The base flood is the 1% annual chance flood. And that is the statistical probability that a flood will happen, and there's a 1% chance that a flood will happen in any given year. We used to call that the 100-year flood. But FEMA wants to move away from that because it's a little misleading. But it's the same, 100-year flood and 1% annual. That's the flood that Congress decided to regulate way back in 1968. The base flood elevation is the water surface elevation of that base flood. So a 100-year flood would have a certain water depth, and that's recorded on the flood insurance rate map. The special flood hazard area are the regulated flood zones, and that is the area that is inundated by the 1% annual flood. There are two kinds of flood zones in the special flood hazard area. There are A zones and V zones. A zones are zones where the flooding source are rivers and creeks and ponds and lakes. A V zone is a zone where the flooding source is the ocean, and it has a wave action associated with it. So it's actually where the waves are 3 feet or higher. Okay? Yes? The tsunami inundation maps are not incorporated into the FEMA flood insurance rate maps at all. They're two separate, completely different products. So you're not required to purchase flood insurance in a tsunami zone unless you happen to overlay also with one of these flood zones. But if you do choose to purchase flood insurance in a tsunami zone, even if you're not in a FEMA flood zone, your flood damages are covered under that policy. Yes?
How much percent of the payout does FEMA have for ocean-type events compared to rivers, creeks, and lakes in Oregon?
In Oregon, I don't have that specific information, but it's possible that I have some statistics here. Why don't you come visit me afterwards? And it's going to take some time to get through it, but I have some statistics here that...
particularly minimal, just for the fact that less rivers flooded numerous times in the elevated road houses. There's numerous low houses in the city that are usually old that have never been affected.
Right, right. So Lincoln City has 100 policies in the V zone and 4 losses suffered. 4. Yes, since 1978. And Lincoln County has 28 policies in the V zone and have suffered 3 losses. That gives you a basic idea. Yeah. All right, so the National Flood Insurance Program construction standards have a lot of very detailed requirements, and I'm going to touch on one of them that's really important for rating flood insurance, and that is foundation vents. If you have a building that has sufficient FEMA-qualified foundation vents in it, the floor that's used for rating your flood insurance policy becomes the floor you live on, the elevated floor. But if your foundation lacks those flood vents, then the floor that's used for rating is the crawl space floor. Now keep that fact in mind as I bring up this next slide. When flood insurance is rated, the cost of it depends on the elevation of the lowest floor in relation to the base flood elevation. So the lowest floor, remember, is the lowest fully enclosed area. So if you have foundation vents in your foundation, the lowest floor is the floor you live on, up elevated. If you don't have foundation vents, the lowest floor is on the dirt. Okay? Yes, there are rules for that. You have to have 1 square inch of vent for every square foot of enclosed space. And the vents have to be within 1 foot of grade and on 2 separate walls. There's a technical bulletin that describes all that in detail. But for right now, I just want you to realize when I say the lowest floor, I'm referring to the lowest fully enclosed heatable floor. Okay? And if your crawl space has no vents, I'm referring to the floor of the crawl space. All right, so flood insurance is always rated on the elevation of the lowest fully enclosed area relative to the base flood elevation. So the red house there, it has a fully enclosed area below the base flood elevation, and therefore flood insurance is more costly than on the white house, which is elevated on post piers and piles, has no enclosures below, and the living floor is above base flood elevation. So that flood insurance would be less expensive than on the red house. Okay? So this is an illustration of the rate structure for the National Flood Insurance Program. On the pre-firm buildings, before this legislation, the cost of insurance only varied by how much insurance you purchased. All this business about vents and elevating and all that was irrelevant. It was a flat line, you can see there, flat line, that was based only on how much insurance you bought. So your cost varied. If you bought $100,000 of insurance, it was less expensive than you bought $200,000 of insurance. When the subsidies are taken away, the buildings are rated actuarially based on the risk they face. And in that case, the type of building you have does make a big difference in the cost of flood insurance. The orange line represents the actuarial line. And you can see that if the building's elevated well above the base flood elevation, flood insurance is fairly inexpensive. But if it's well below the base flood elevation, insurance is quite costly. And that curve that's shown there is an actual plotted line of actual costs of flood insurance. So it really does go along pretty steady until you start to get below the base flood elevation, and then it goes up steeply. Yes?
I have a home base show.
Mm-hmm.
We're actually going through a new management system right now.
Mm-hmm.
And my home has no openings in the substructure.
Correct.
Okay. On the latest map that they gave me, I am 4 feet above the BFE.
Okay.
How will that affect me?
So what part of your building is 4 feet above BFE? What part of your building? Is your foundation 4 feet above BFE or the living floor?
I don't know exactly.
Okay.
But
So
I know my elevation above sea level is 1 feet.
okay. So if your building foundation is above the base flood elevation, you qualify for what's called a letter of map amendment. And you can have the building removed from the mandatory purchase regulated flood zone. Okay? If your building foundation is below base flood elevation, but your living floor is what's 4 feet above, that's good. You'll still have to be required to buy flood insurance, but the cost of flood insurance is low if you can vent that foundation. And also, do you know if you're in a V zone or an A zone?
And a VO6.
Okay.
My latest.
Yeah, so come see me afterwards because there's a lot of detail here about your own personal situation. But oftentimes in those V zones, if you have a solid foundation wall foundation, insurance can be quite costly because today V zone construction standards demand you be on post piers or piles. So, yes. Yes.
Is there a time limit established with that letter, or?
No, they don't expire, and even if the map changes, they don't expire, because what FEMA does, most of the time they don't expire. When a map changes, FEMA evaluates all the letters of map amendment that they have granted on the old map, and they revalidate those on the new map. And if they pass the test, the LOMA stays valid. Now, in practice, most LOMAs are revalidated on the new maps. So most LOMAs will not expire. There are a few that won't be revalidated, in which case you have to go through the process again. Or, yeah. Yes?
I have a question. I have insurance.
Mhm.
But
Okay.
I've not received my document.
Okay.
I did.
And this is an
Through the insurance company that services this. And
Yeah.
they looked at it and said it was just going to go up a little bit this year, and they had a price for it. But is that really what it's going to be? Or I don't get it. Why haven't I got my?
I can't answer that question right now, but come see me later, and I can give you some resources to figure that out. Yeah, I think it's a bad sign, because if you You want to renew your policies. You don't want policies to lapse in this new world order, because if you let a policy lapse, it's going to be re-rated, and that could end up being very costly insurance. So come see me later, and we can. I'll give you some resources to figure out what's going on. Okay, so what does that illustration mean in dollar terms? This illustrates the maximum amount of insurance that you can purchase for a residential property, which is $250,000, and $100,000 in contents. Most people in Oregon do not purchase that much insurance because NFIP only insures buildings. They don't insure the land, so it's only the value of the building that you're insuring. So if your building is 4 feet above base flood elevation and it's in the special flood hazard area, you can expect a policy cost of around $600. If your building's lowest floor is 1 foot below the base flood elevation, your policy cost would jump up to $5,600. And if you're in the unfortunate situation where your lowest floor is 4 feet below the base flood elevation, you can expect a cost of around $10,000 a year. And in the V zones, you can double those costs. Yes?
This is the bottom line we're paying for these covers here in the South, like our insurance agents tell us, or is there really a risk on everything goes?
Well, there is a risk. There's no doubt that there's a risk, but it's a low risk. And one of the reasons the East Coast gets so many payouts for flood insurance is because it's flat. They don't have these great big bluffs, and so the big storm surges come blowing across a large area, and they've developed all that stuff, and so they suffer losses. So,
We're basically going to pay for that.
well, that's partly true. They also, the state of Florida, for example, has a lot of pre-firm homes in the flood zone. So in that case, you're paying for Florida. But there are other places on the East Coast that don't have so many pre-firm subsidized policies, and they're paying their way. So it's not a blanket thing. We're paying for the whole East Coast. But yeah, it's a nationwide pool. So the low risk states subsidize the high risk states. Yeah. Yes.
All right, you've got pre-firm, $3,600 a year.
Yes.
Post-firm is only $553. What's the difference?
Okay, so remember I said that the pre-firm buildings were rated on a flat scale. It didn't matter what the building looked like. You could have been elevated like this one 4 feet above base flood, and you'd be paying too much under the pre-firm rate tables. But if you're rated actuarially on the actuarial table, like a post-firm building, then you're rated with an elevation certificate, and you pay less money.
I've let my insurance last for the last 3 years.
Mm-hmm.
So according to that, true?
Well, it depends, but listen to this presentation a little more, and you may learn what your situation is. Yes? Okay, so if you have a pre-firm older home, well, let me back up. In order for an insurance agent to rate a building on an actuarial rate table, they need something called an elevation certificate. Most post-firm buildings have elevation certificates because they were required to purchase post-firm flood insurance. So sometime along the way, a building owner purchased, maybe not you, maybe the previous building owner, hired a surveyor to get an elevation certificate. Pre-firm buildings, on the other hand, did not need elevation certificates to be rated because the building type was irrelevant. So many pre-firm building owners don't have elevation certificates. So in order to find out the cost in your particular situation, you have to go buy an elevation certificate from a licensed land surveyor, and then that is used by the insurance agent to figure out the elevation of the lowest enclosed area and to rate the flood policy. If you have a mortgage, you need an elevation certificate now. Okay. Right. You're probably receiving a subsidized rate. right? But it's going to renew at a higher rate, and I'm going to explain that in a second, okay? So I think I'm going to skip this right now. So there are triggers for when a pre-firm building will be fully rated at actuarial rates, okay? And those triggers are the sale of a building, a lapse of a flood insurance policy, or if the building never had flood insurance and you're going to buy it new flood insurance. Not a refi. A refi will not automatically trigger re-rating. It has to actually be a sale.
I just refied a house with $340 to $3,000.
Well, you know what I'm finding is that a lot of the agents don't understand the refi is not a sale in this new Biggert-Waters, and they are misrating policies. So you might want to challenge that. Okay? Okay, so those three triggers will cause a subsidized pre-firm policy to be re-rated as a full actuarial policy with on an elevation certificate, using an elevation certificate. Now, there are certain classes of buildings that don't have to hit these triggers before they will see cost increases being phased in. And those are non-primary residences and commercial buildings and severe repetitive loss buildings. Let's set aside severe repetitive loss because we don't have very many of those in the state. So non-primary residences and commercial buildings will see rates go up 25% per year until they reach their full actuarial cost. And in order to be rated on these actuarial tables, we need this thing called an elevation certificate. And if you'd like to come up and look at one after we're done here, I have a sample that you can look at. But the elevation certificate is a form provided by FEMA that a licensed land surveyor fills out, and it describes characteristics of the building that the insurance agent needs to properly rate the policy. Okay, so I'm going to go through these rate increase triggers one more time with a little more detail. So in your case where you bought a house in July, the Biggert-Waters Flood Insurance Reform Act took effect July 6, 2012, the day it was signed. But FEMA did not adjust their rate tables until much later, and they did not start applying those rate tables until October 1st, 2013. So between July 2012 and October 2013, NFIP continued to provide subsidized policies on buildings that were sold during that time period. But those policies are all going to renew at the full risk rates. You will not be offered a renewal on that subsidized policy. So what will happen is you will actually get a cancellation letter from your insurance agent, and then you will be advised to go buy new flood insurance on the new actuarial tables. And in order to do that, you're going to have to hire a surveyor to create an elevation certificate.
Why do they want to know if you live in the house or not?
Well, I'll get into that next.
Okay.
As of January 1st, 2013, non-primary residences began to see their subsidy be phased out. And today, FEMA defines a non-primary residence as one that will not be lived in by the insured or their spouse 80% of the time. But a bulletin just came out yesterday that changed that as of June 1st to 50% of the time. So now a non-primary residence is defined as a building that will not be lived in 50% of the time by the insured or their spouse as of June 1st. And that includes rental properties, residential rental properties. That's a tricky one because I think that would be that would be considered a one of these non-primary residences, unless it's a unit that's over a building that has over 4 units. Okay, so And again, an elevation certificate will be needed to establish the full actuarial cost. So the elevation certificate will establish the cost, and then your cost will increase 25% per year until you reach that full actuarial cost. And I had a question the other night about what kind of documentation FEMA will require to establish whether you live in the building 80% of the time or 50% of the time starting June. The bulletin that was published yesterday actually provided information about what kind of documentation they're looking for, and they'll be looking for voter registration, driver's licenses, and that usual stuff that establishes whether you live there as a permanent place. Okay, on October 1st, 2013, commercial properties will start to see their subsidies go away, commercial pre-firm properties. And again, the elevation certificate will be needed, and it will establish the final full actuarial cost, and then their insurance costs will go up 25% per year until the full cost is reached. And then beginning October 1st, 2013, all new flood insurance policies must be rated actuarially. You can still renew your pre-firm policies if you had them before July 6, 2012. So if you had a pre-firm policy before July 6, 2012, and you continue to renew it, you will keep receiving the subsidy until you hit one of those triggers. But if you let that policy lapse, you'll be rated on as a new policy at actuarial rates. So the take-home message is, if you have one of those older pre-firm policies, don't let it lapse. Keep paying it. Okay? So there have been cost increases on post-firm buildings this year, but they've been relatively minor, 6 to 7%. And if you have one of those pre-firm policies that you bought before July 6, 2012, and you keep renewing it, you will see a 16% increase this year. And so you can see that what NFIP is doing is gradually phasing out those pre-firm policies for everybody, even if you have an older policy. No, that's for everybody. Those what I just talked about. So some people, yes. Okay. Yes.
Is that correct? But when we call the bank says, I don't know. Okay. So I call our insurance guy who used to handle it, and he says, I don't know. So who do we contact? Find out.
Do you have the documentation with you?
No.
Okay. So NFIP insurance, if you have escrowed any other insurance or property taxes, the NFIP insurance must also be escrowed. So maybe that's happening.
Well, so the bank would become
Yeah, I have to look at your individual documentation, which I'm happy to do later.
I have no idea what documentation. We are so confused. I don't know what documentation.
Well, make sure you take my phone number home with you and call me tomorrow, and we can work things out. Okay? Really, that's part of the reason I'm here, because I know there's a lot of confusion out there, and there's no one to turn to help you figure this stuff out.
People won't help us. Our insurance guy doesn't know.
Right.
And the bank that sent us the original letter, they say we don't
Yeah.
really know what to do.
So any of you who have questions like that, where you just can't get a straight answer from anyone, please take my contact information and contact me later. I live in Eugene, work out of Salem, but if I can't solve the problem, I know how to escalate. Okay? Yeah. So I just want to remind you there is a requirement to purchase flood insurance if your building is located in the special flood hazard area and you have a federally backed mortgage. The problem is that over time the lenders stopped paying attention to this requirement, and the penalties for not paying attention were so low that most of the banks just ignored them, or they paid them, just wrote a check to NFIP. This Biggert-Waters Flood Insurance Reform Act dramatically increased penalties to lenders who do not monitor who's maintaining flood insurance. So as a result, if you are required to have flood insurance and you dropped it last year, 2 years ago, 10 years ago, the banks are coming back and saying, you need to buy flood insurance and you need to buy it within 45 days. Yes?
This special flood hazard area, how
Uh-huh.
do you know that?
I'm going to get to that in a second, okay? And that is significant because there are a large number of people in the state that do not carry flood insurance and need to. They have a mandatory purchase requirement, but they don't have carrying it. Its average is 60 to 90%, varies by county. So there are lots of people who are going to be getting notices from their lenders demanding that they purchase flood insurance within 45 days, and they will need to have an elevation certificate to do so. Yes? If you own your home outright, you do not need to purchase flood insurance. You don't have a mandatory purchase requirement.
Or a private contract, right?
Or a private contract, right. It's only federally backed mortgages that require the purchase of flood insurance. All right, so how do you know whether you're in a flood zone? You can go down to your local planning office, and they have maps of the flood zones. And if you're unfamiliar with looking at those maps, I suggest you do that because they're not the most intuitive maps in the world to look at. So you can go down to the local planning office and they can show you the maps either in paper form or on a computer screen and help you understand what these flood zones are. If you're comfortable looking at the flood maps, you can go to the FEMA Map Service Center, which is a repository of all the flood maps in the country. And they have various methods to look at the flood map. They have their own little GIS system. You can look at copies of PDF copies of paper maps, or you can download a Google Earth application, which is my favorite way to look at flood zones because it's the most intuitive and easiest to use. Okay? And the instructions here tell you how to do that, how to look at a Google, the flood zones on a Google Earth application. So what you do is you load Google Earth onto your computer. Then you go to the FEMA Map Service Center, and the web address is in your handouts. You navigate to a link called the National Flood Hazard Layer. You click on that link, and it's right on the first page of the Map Service Center. Click on that National Flood Hazard Layer link, and then on that next page, navigate through until you find a file that has a KMZ suffix. You click on that KMZ file, and it will load the flood maps right into Google Earth and open Google Earth. And then you type in your address in Google Earth, and it will zoom into where you are. Now, if you save that Google Earth when you leave, those flood maps will persist. So the next time you open up Google Earth, the flood maps will still be there. Okay? And this is a screenshot of the Google Earth application. The blue area is the special flood hazard area, the regulated mandatory purchase zone. The brown areas are the 500-year or 0.2% annual flood. Those are not regulated, but they're there for your own information. If there's no color associated with it, it's not in a flood zone. And that red striped area is what's called the floodway, and it is an area of the special flood hazard area that is reserved for the water to pass quickly and deep. And as a result, there are land use restrictions on what you can do in that floodway because it needs to stay open and clear so the water can move through. Yes? Yes, that will tell you what zone you're in. This particular screenshot doesn't show the zones, but there's a checkbox that you can click and it tells you what zone you're in. Yes? Yes. Yeah. Okay, they're talking about the fact that Lincoln County is going to get new flood maps in 2014, and they'll go into effect in 2015. Yes, it will change the zoning. I was going to talk about it later, but I'll talk about it now. These new flood maps are being produced by the Oregon Department of Geology and Mineral Industries under contract with FEMA. And that's good because the DOGAMI is a local government agency that understands the coastline processes very well. We're not getting a map produced by somebody in Texas, okay? And they're using what's called LIDAR, which is it's light ranging and detecting, where they shoot light beams down and they bounce back, and they can get a really, really accurate depiction of the topographic features on a landscape. So they take the modeling and the great topographic map and they marry them together, and that will establish the flood zone boundaries. They will not include the tsunami inundation zone because that is a completely separate process. FEMA, the NFIP does not allow the tsunami information to be included in the flood insurance rate maps. There's a possibility that it will change your insurance situation. You will either be taken out of the flood zone, or you might be put back in, or the base flood elevation might change. I haven't seen the maps yet, so I don't know exactly how they'll change. But there will be a public process where you can look at the maps and talk to the planners and figure out how things change for you later on when those maps are released. Okay, so there is a mandatory purchase for flood insurance. Every mortgage that a federally backed lender makes has to do a flood zone determination. So there are millions of these determinations done every year. Most lenders do not read the maps themselves. They hire flood zone determination companies. And these flood zone determination companies, most of the time, do not physically look at the map. It's all done by computers. So they get the parcel data from the cities and counties, the parcel boundaries. They get the flood zone boundaries from FEMA. They put them together in a computer system, and the computer will say whether a parcel is in the flood zone. Not the building, the parcel. But the thing is, the flood zone determination is supposed to be done on the building level. These zone determination companies don't know where the buildings are, and they most of the time don't bother to look. And so they will send a positive flood zone determination if the flood zone touches a corner of your property, even if your building is high and dry. You can challenge that, and you should challenge it, okay? There are 3 ways to challenge. The first is to call your lender and ask them to do a manual flood zone determination. Say that you've looked at Google Earth, you are confident that your building is out of the flood zone, and you want that flood zone determination company to make a manual determination, meaning that they will put eyeballs on the map and actually determine where your building is. Yes?
I'm really sure that anytime the government's involved in this, like I have 2 houses next to each other. They're both $348 a year. The one is 2 feet lower than the other. The one is $6,400 a year. It's 2 feet different. So I call the city of Lincoln City, the county, the state. I call FEMA in Washington too. A dozen times they said that's the way it is. I finally got mad and called in Montana, the insurance company. I have to get a gal that was from Lincoln City. He said, you were in the wrong zone, and they sent me tax of $10,000. Probably had over 100 hours on that project. I was concerned that, what do you do if you can't get anywhere at FEMA? And I talked to quite a few FEMA people back east, and they said that's just the way it is.
Yeah, FEMA can be sometimes difficult to get through to. But what I'm telling you is how you challenge it. So the second thing you can do is do a letter of determination review, and that's where you and the lender petition FEMA to determine the location of your building relative to the flood zone. And you'll get a letter back that says the building's in the flood zone or the building's not in the flood zone. You take that to your insurance agent, and then the policy can be rated based on that determination. The third way, and that costs $80. You pay FEMA $80 to do that. The third way is to do a letter of map amendment, and that will often involve hiring a surveyor to fill out an elevation certificate or to at least establish the lowest adjacent grade to the building. If the lowest adjacent grade to the building is above the base flood elevation, you can be removed from the mandatory purchase of flood insurance. And that's done through a letter of map amendment. And that is, FEMA processes that for free, but you have to hire a surveyor in most cases. There is one case where if you can look at the flood map and very clearly see that a building is out of the flood zone, you can get a letter of map amendment out as shown that does not require the services of a surveyor. So there's a building here, for example, a little white building right here. Okay? Let's say that you get a positive flood zone determination. It's very clear that building's out of the flood zone. You do a letter of map amendment out as shown, and then that building will be tagged as being out for the flood zone determination companies. You had a question?
Yeah, I applied for the waiver of the amount I call it congressman and stuff looking into it.
Yes.
And it's not that easy. It's like everybody's claiming a different set of maps. And we're trying to prove elevation. I said 40 foot above flood. But trying to get them to realize where I'm at, I say I sit at the cost of it. And yes, the bottom of them is the river.
The bottom of your parcel's the river.
The river.
Yeah.
They actually sent me a, it was a very basic map, and then told me to write a text for my property bill. I sent that back, never heard another word from them. But I still got no alleviation from having to pay the FEMA flood insurance.
Okay.
I'm 40 foot above it, and if I go, the whole coastline goes.
Right. Okay, so two things. Have you visited the county planning office and had them prepare a map, or a city, wherever you were located?
I believe that the same map that FEMA sent me was the same one that they actually did have here.
Right.
And they still didn't get it in Ohio.
Well, the thing, what the city or county planning office can do is actually authoritatively locate the building on that map. And then that carries more weight to FEMA than you putting the X on the map. Okay? Yeah. So
we're going through, I read about a congressman that really everybody here should know about. She's going through it. And she's a congressman and had trouble getting the waiver from FEMA. And she had to fight like the Dickens. Now, what chance do we have?
well, in actual, yeah. Yeah. Right. There are dozens, if not hundreds, of these letters of map amendment approved each year. You shouldn't be having problems, and if you are, contact Ono or myself and we can figure out what's going on. Because FEMA has a very precise and strict rule book, and if you deviate one little bit from that, they're going to reject your application. And I think that's probably what's happening. So we can figure out where the deviation is and, you know, yeah, yes.
You can't understand the county itself uses the dredge survey of the state. Whoever's in charge of that, the pressure you put on 22 miles of river covers it from all of that. You know it's a danger wait to have, yet nobody discusses dredging that bay. And we need not only that, it would improve our area economy, our area's economy, because you have windsurfers, a lot of sports people that would love to go out on that bay. They don't get like, you don't like going to make a sand there, it's silt. But Jesus, I mean, that's going to, if something isn't done, alleviate that waterway, it's going to cause massive trouble. I mean, that's just no doubt about it. You can't get the Army Corps of Engineering. By the way, their track record isn't all that good.
Yeah.
The Norwegians, however, build their own. Well, why can't we do that? Dredge our own day right here, produce the company, have it run by us, but we can't get through you. I mean, through Army Corps of Engineers. But until
Yes, there are so many legal impediments to dredging these days that it almost never happens. there's Endangered Species Act. There's the is a big one.
And all they do is artificial.
Well,
Everybody invested on rock.
yeah, I can sympathize with the situation, but dredging projects are really difficult to do these days. They're not impossible. They're doing a dredging project in Tillamook Bay, but it takes years to get these projects through the regulatory process.
And it should be something you should start today.
Well, you have to work with the federal government on that because most of the laws that prevent dredging are federal. Yeah. Okay. So the deal is, if you have flood insurance today, make sure you keep renewing it, because if you don't, it's going to be, it has a high likelihood of being you have a high likelihood of being re-rated. Okay? If you're getting ready to sell your property and you are a pre-firm building before the very first flood map, I highly recommend that you get an elevation certificate before you market the property, because the new owners can use that elevation certificate to get an insurance quote to figure out if they can afford to live in that house. No surprises. In fact, we don't want any surprises at closing. That's what kills deals. If you are buying or considering buying a property in the special flood hazard area, I highly recommend that you obtain an elevation certificate from the seller and take it to your favorite flood insurance agent and get an insurance quote before you make a purchase offer. And make your purchase offer contingent on the availability of affordable flood insurance. Because what happens sometimes is you get a quote from your agent, you go ahead with the deal, then it all goes to underwriting, it goes to a higher level of review, and they find out that the original agent misquoted the insurance, and now you're faced with a cost you can't afford. So make the contingency in there that you won't purchase if the flood insurance is too expensive. Yes, even if you get a good quote.
You know the relationship between insurance companies and FEMA on setting rates.
Okay.
The insurance agents collect the money for FEMA, the underwriters, I don't.
Okay, so here's how it works. The rates are set by Congress. They're set nationwide. They're adjusted every 6 months. They can be adjusted every 6 months. In practice, they're adjusted every year. Okay? Then the people that sell flood insurance, the insurance agents, have contracts with the NFIP to sell that flood insurance. So each agent sells the same flood insurance policy. The cost should be the same no matter where you go. The problem is that the agent's training and expertise varies significantly, and misrated policies are common. So it's likely that if you go to 3 different insurance agents, you're going to get 3 different price quotes. And that makes it really tough for you because you don't know which one to trust, right? It is a fact, and I want you to write your federal people about this. Insurance agents are very poorly trained. NFIP does a terrible job at training flood insurance agents, and it undermines the credibility of the program and creates all kinds of hassle for you folks. So that's why when you ask different agents, you get different costs. Okay, so those agents that sell that flood insurance do get a commission from the NFIP. And that commission rate is public knowledge. I don't have to remember what it is off the top of my head. So every flood policy that an agent sells, they get a commission from NFIP. And then that company services the policy. Some policies, though, are transferred to FEMA Direct, and FEMA Direct services the policy. Not all, some. So, yes?
Do all insurance agents sell flood insurance?
No.
Only some.
No, only some. There are a lot. You have to specifically sign up to sell flood insurance, and you have to take training. It's very minimal, 3 hours once in your life.
So basically,
Yeah, basically anyone can sell it. So if you know someone that sells a lot of flood insurance, I do business there because they're more experienced with the product. I understand from insurance agents, it's a very unusual insurance product. And you have to keep up with it because it changes every 6 months. So, yes. Yes. Yes, absolutely. Deb Farmer is the insurance liaison at FEMA Region 10. and she will help you resolve issues with insurance, such as yours. Yes, correct. Yes, yes. Now, the problem is she's kind of hard to get hold of. But you can call her directly. Yeah. Well, she travels a lot, and she services a very large region: Alaska, Idaho, Washington, and Oregon. So she's hard to get hold of. That's why I'm saying start with me, and I can help. If it's an easy problem, I can deal with it. If Deb's away, I know someone else to call. So, yeah. Yes, the capacity issues are going to rear their heads up soon. Yes.
So once again, 100,000, is that the term I'm confused? 250 is the maximum you get?
Yes, for residential property.
So if you got a $5 million house and they give you a check for 250, you're on your way.
That's correct.
Okay, so what about, you said something about 100,000?
Well, you can buy flood insurance anywhere from $5,000 to $250,000. The lender will tell you how much flood insurance they require you to buy. And if you don't insure up to 80% or over 80% of the actual cash value of the home or the maximum the NFIP provides, you will not get a actual cash value settlement. You'll get a depreciated settlement. It's based on the structure.
So if you've got 1,000 square foot house, maybe $100,000, so you got it.
Yes, correct. Right, right.
So I've got like 1,500 square foot, and I could charge around 250, so I would have more insurance than I need, right?
That's quite possible. Many lenders are too lazy to figure out how much insurance you actually need, and they're terrified of their regulators, and so they'll make you buy the maximum amount of flood insurance available. So you can call the lender and challenge that and tell them that the building's only worth $100,000. I don't need to be insured to $250,000. Well, you can do it. You can do it. Yeah, you should do it. Because the agents just do what they're told, right, from the lenders. So I have seen many cases where buildings are overinsured. Yeah. Okay, moving right along. If you have an A-zone building, if your building is located in an A-zone, a riverine flood zone, there are things you can do to lower the cost of flood insurance. And the most important thing you can do is install flood vents in your foundation. These flood vents protect the integrity of the foundation during the flood because they allow water to flow in and out without causing pressure on the foundation that can break it apart. It's only for A zones. These flood vents make no difference in V zones. AE zones, yes, all A zones. Yeah, AO, A, AE, A1, A6, A9, so on. Anything that starts with an A. You can buy these at local hardware stores. This vent here is what's called a smart vent, and it stays in a closed position most of the time, but during a flood event, the vent floats open and opens fully, allowing a lot of water to pass in and out. And these vents, you get extra credit for using these vents. These are called smart vents, and I've just understood recently that you can buy these at Lowe's.
How do you close those?
It's in its closed position now. Well, the louvers in here will close if it gets lower than freezing.
See, my problem is my house is vented like a plenum chamber.
Mm-hmm.
All the heat goes in underneath the house, and then it comes up through different vents.
Right.
So I don't have stuff going to each vent. It's all underneath, then it comes up through.
Right, right.
Keeps my basement dry. Keeps my substructure
Yeah,
dry.
yeah.
So that wouldn't do me any good.
Yes, you have a building design that's challenging to vent properly. Yeah. So if you have a pre-firm building and it has a solid foundation with very few flood vents in it, explore with your flood insurance agent or a contractor or the city or county what you need to do to properly vent that foundation, because it will make a difference. And if you have a pre-firm building without an elevation certificate, you won't know how many vents to install and all that until you get that elevation certificate. Now, after you install the vents, you don't have to hire a surveyor again to change the number of vents that are reported on the elevation certificate. Local government can do that with a memo, okay, and that will be accepted by the insurance agent. Okay, the other thing that you can do is if you have converted your garage to livable space, you finished it out, you put a workshop in there or a gym or a playroom or laundry area, hobby room, whatever. That becomes then a floor that FEMA will consider when figuring out where the lowest floor is. So let's say you have a house that has all kinds of nice foundation vents in it, but then you've converted that garage and the garage is lower than the living floor of the house. That finished garage will become the lowest floor, and it can cause your insurance costs to increase. So the way to solve that problem is take out all its stuff out of the garage and turn it into an unfinished space like the picture down here shows. No drywall, lots of flood vents, all the electricity elevated above the base flood elevation. If you have a pre-firm home in the flood zone, in an A zone, and you have a basement, you're likely to see very costly insurance. Installing flood vents alone will not solve that problem. You're going to have to fill the basement in. So again, you have to work with your local government and your insurance agent and figure out a strategy for making these modifications so you get your biggest bang for the buck. Question here and then you. Yeah. Did you have a question? No. Okay. Go ahead.
Well, I go back to that A and B.
Yes.
A means only rivers and ponds.
Yes. Mm-hmm.
B means ocean.
Correct.
The way my house is set, I'm facing Elsie Bay. I am not facing the ocean.
Mm-hmm.
And right now they have me on a VO6. There's no way an ocean wave is going to affect me at all. It would have to be a 40-foot wave to get to me, and that would only be by a tsunami.
Right.
So I think I've been reclassified now.
Okay, so there are some situations in which FEMA made perhaps erroneous decisions when they made the map. Once that map becomes published and a zone is shown, it's virtually impossible to challenge that zone. You have to challenge the zone when the maps are being changed. So if you fervently believe that your zone is wrong, make sure you attend these public meetings that are coming up on the new maps so that you can challenge the zone designation in your area. Well, when the new maps come out in 2014-15, there will be some public meetings where everyone gets to look at the maps and talk to the people that modeled the maps, that built the maps. So make sure that you go to those meetings so you can explain what's going on and listen. Sometime next year, right. I don't know exactly when or where. You're going to have to just watch the newspapers and keep your ears open. But once a zone is printed on an effective flood insurance rate map, it's virtually impossible to change it. You'd have to hire an engineer at huge tens of thousands of dollars expense.
I've never seen a rate map, so I don't know what.
Okay.
This was rated back in 94, 95.
Yeah, go visit your local government and take a look at that map, and so that you understand. Okay. Mm-hmm. Mm-hmm. Yeah, for the people in back, you can view the flood insurance rate maps at any city or county office. They all have them. And if you're not familiar with looking at a flood insurance rate map, I highly recommend you go down there and use their expertise, because if you go look at the Google Maps without getting some orientation to the map, it can be really confusing. So. All right, so for those of you who have V-zone properties and you have solid foundation walls or you're built slab on grade, there's virtually nothing you can do to lower your flood insurance costs, except for elevating the building and putting a completely new foundation underneath it. And that's unfortunate, but I haven't been able to figure out a mitigation yet for those buildings. So, yes? Oh, if the concrete slab is higher than the V-zone elevation, you need to do a letter of map amendment and get that building out of there, out of the mandatory purchase zone. And once you do that, your flood insurance costs, first of all, it won't be mandatory, but if you want to protect yourself, which you may very well want to, and I recommend you do, you get what's called after a LOMA, you get a preferred risk policy. And those policies are very inexpensive. They're less than $500 a year, and that includes contents. So after you get a LOMA, your flood insurance costs go down dramatically. So if you're in that situation, do get that LOMA. You'll save a lot of money. Yeah. Okay, so there are grant funds available to elevate buildings. FEMA does provide grant funds to elevate buildings. Unfortunately, they don't provide very much money. And as a result, and that money is run through the state. It goes from NFIP or FEMA to the Office of Emergency Management, who then disperses it out to the cities and counties. If you want your building elevated, you go to the city or county and learn more about getting into the program, and then it works its way up to the system. But we don't get very much money from FEMA every year, so we have rules or priorities. We prioritize buildings that have flood insurance on them and that have flooded more than once. So if you have a building that's flooded and you're sick of it, go visit your city or county planning office or emergency management office, and we can help get you plugged into a program that can provide money to elevate the building. FEMA pays 75% of the cost to elevate a building. Okay? FEMA also provides money for us to do buyouts. So if you have a building that has flooded repeatedly and it's just obviously in a bad area, FEMA provides money to buy that building. The building's demolished, all the utilities are decommissioned, and then the bare land is turned over to the city or county to manage as open space. And in that program, you get 75 cents on the dollar. So if you're selling the property, and that includes the land, if you're selling the property for $100,000, you'll get $75,000. Okay? If you're a severe repetitive loss property, the federal government pays 100% of the cost to do a buyout. Okay, there is some pending legislation out there that would delay the implementation of Biggert-Waters, especially the provision that re-rates policies upon sale. However, that legislation has stalled out. As of yesterday, it was brought to a House vote, and it was not passed. It didn't fail, but it just didn't get permission to move forward. So I don't expect any more action on that until January when they come back from vacation. So as of today, the Biggert-Waters Flood Insurance Reform Act stands as is. But if you're interested, do keep your ears open, because other legislation is being introduced every day, because our Congress people are very concerned about the consequences of Biggert-Waters, particularly our Oregon delegation. So if you have concerns about this legislation, or you have particular stories. They're most interested in hearing stories of, I used to pay $1,000 a year for flood insurance and my renewal came in at $30,000. They really want to hear that because it helps them understand how this system is unrolling, how this new legislation is unrolling. Okay, we talked about the new maps, that you will be getting them sometime in mid-2014 to be effective in 2015. So any questions? Any more questions? I'm happy to talk to you individually outside the group session if you have individual situations. And do take my contact information, and I'm more than happy to help resolve problems. Yes. Oh, Deb Farmer? Yeah, on the very last page of the, it's hard to read. Lisa, did we pass out those big sheets with the contact information? I think we have another handout that has that last page with the contact information in big type. Oh, it's not
This
here.
is the number that's right here on it for you. Is this the one that we should contact you, that I should call you on?
Yes.
Tomorrow? And
Yes.
then what documentation are you referring to that I should have? Because I
Well,
have
when-
so little because nobody seems to know anything.
When I talk to you,
Yeah.
you can tell me the whole story, and I'll begin to collect
Then
a
you
little.
Tell me and
right.
then I'll,
Yeah.
Okay, perfect.
Right.
Thank you so much. This was very helpful. Scary.
Good.
That's helpful.
Good. Thank
I'm the
you.
one that I haven't gotten my bills.
Yes.
And part of, I had insurance with State Farm, my homeowners, so I didn't cancel my FEMA with them.